Good afternoon, everyone. I'm Stephen Herwire, owner of Herwire Financial. Plans with Direction. Today's Friday, the 13th in December, 2024. After the market wrap, we're going to talk about what I think is a great New Year's resolution. According to a survey taken last year by Forbes, October 2023, the Forbes Health One poll of 1,000 U.S. adults. New Year's resolutions, number one is improved fitness. Number two is improved finances. At 38%, improved mental health, 36%, losing weight, 34%, improved diet, 32%. Okay, we're going to focus in on that second one, a financial plan. It's a long-term way to improve your finances. It's not what you make, it's what you keep. The best way to make money is to avoid losing it. Thank you, Bernard Baruch. Financial plans are to help you avoid the myriad of minds in your financial life. There is a cost, but not doing anything can cost also. Investment management is simply investing to increase your pile of money for when you retire. The financial plan helps you spot and hopefully avoid or mitigate things that will wipe you out quicker than a stock market crash. And I'm going to give 3 real-life examples where a plan could help avoid costs. They were 3 examples of things that happened while in my practice in the last 18 years. Okay, many things have beneficiary designations. Life insurance, retirement accounts like 401ks, IRAs, Roth IRAs, etc. Annuities. So in these instruments where a beneficiary is stated and you sign for, if you die, it's going to go where that beneficiary designation is, even if your will says something different. So I once had a client come to me and explain that their ex had passed away. Now, even though the ex had remarried, started a new family, they did not change the beneficiaries on their 401k. So this client was the beneficiary. The client asked how to get the money back to the ex's family. I indicated, even though I wasn't an attorney, it was my understanding that in a case like this, my client was free to take the money from the old 401k. Fortunately for the decedent's spouse, the client didn't feel right about this, so I referred them to an attorney I knew who could help them with this sort of thing. Part of a financial plan is doing periodic beneficiary reviews to ensure as life circumstances change, that your wishes for things that pass outside the will, like the aforementioned insurances and retirement accounts, go where you want them to. In cases like this, even if the will states something different, the beneficiary designation will determine where things go. Had this client not been so honorable, the decedent's family would have missed out. I was not informed of the actual amount, but this mistake could have cost the family many thousands of dollars. Next example, qualified charitable distributions. Now, this applies to people who are older than 70 and a half, for those who are charitably minded, and if you have tax-deferred accounts like IRAs and 401ks. So I had a 73-year-old client who had not yet taken their required minimum distribution for the year. And it was their custom to take the RMD, put it in their checking account, and then write a check to the church. Well, they didn't have enough items to do itemization, so they were gaining no tax benefit from that. So I said, how would you like to gain some tax benefit and still do something that makes you feel good? And they said, sure, what do we need to do? So we did what's called a qualified charitable distribution, a QCD. Basically, the way that works is the IRA writes the check directly to the charitable institution. So before we did this, we consulted with their tax preparer who agreed that it was a good idea. Since they were in the 22% federal tax bracket and the 6% state tax bracket, it's estimated they saved a little over $2,000 in federal income taxes and a little over $500 in state income taxes for a total savings of over $2,500. Avoiding Medicare surcharges. Now, here's the thing. Unlike tax brackets, where if you go into a different tax bracket, you pay a little bit more in taxes, with the Medicare surcharge brackets, if you go over by as much as $1, they can impose surcharges. So I had another client who was working their final year of full-time work. They're going to work 1 month into the next year, and they were eligible for a one-time income for services rendered outside of their job. So they had the choice. They could take the money in December of the year where they were working a full year, or they could take it in the next year where they were only working about a month. So we reviewed their tax returns, and we estimated, because their final full year of work was going to have a similar income to the previous year, we were able to ascertain that taking the income in the final full year was going to push them in over a bracket for Medicare surcharges. I immediately advised, in concert with their tax preparer, to consider pushing the one-time payment off into January of the year where they're only going to work part of the year. The tax preparer concurred, and it's estimated the potential savings from not having to pay the additional Medicare surcharges would amount to about $1,500 a year in savings for 1 or 2 years. These are only 3 examples in my experience. I'm sure there are a lot of other things that could cause problems. So having a financial plan can save you money, even if it does cost something. Okay, unlike some of the other resolutions people make, which require ongoing work and discipline, the work part of the financial plan for the client is at the front end. After that, your planner does most of the work and does periodic reviews with you. Only a few examples of costly mistakes were discussed, but there are a plethora of other potential train wrecks that could be in your path. When I was a reactor operator on the USS Sturgeon, we had a checklist to verify proper operation of the various reactor safety systems. It's similar to a pilot doing a pre-flight checklist. I use checklists to help me spot opportunities and potential problems for my clients during their financial voyage. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to each individual situation. Working years. Biggest, most important question in my opinion is, am I saving enough, and is it in the right place? Sooner you have that answer, the easier it is to achieve your goals, and it lessens the impact because of the time component on your spending money. When you're in the glide path to retirement, that's the last 10 years prior to retirement. Will the USS retirement be shipshape on the appointed day? Will you be able to retire on that day and have a reasonable chance of not running out of money before you run out of life? Which is the question for retirement. How do you avoid running out of money before you run out of life? And finally, the legacy. Does what I worked hard for get to where I wanted it to after you're finished with retirement? I can be reached at herwirefinancial.com. I do in-person Zoom and phone appointments. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, click on the Schedule an Appointment button in the upper right-hand corner of the website. If you want to see more videos like this, go to my website and click on the YouTube channel. It's the red one. If your friends want more information, they can follow me on Facebook, LinkedIn, or Twitter. For the folks that prefer the good old-fashioned telephone, 518-631-2569. Do not text that number because I won't get it and we'll both be sad. There's a separate texting number there. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance referenced is historical, no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representations made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. Unmanaged index returns do not reflect fees, expenses, or sales charges. Index performance is not indicative of the performance of any investment. Investing in stock includes numerous specific risks, including fluctuation of the dividend, loss of principal, or potential illiquidity of the investment in a falling market. Investing in mutual funds involves risks, including possible loss of principal. Fund value will fluctuate with market conditions and it may not achieve its investment objective. The Dow Jones Industrial Average is comprised of 30 stocks that are major factors in their industry and widely held by individuals and institutional investors. Standard & Poor's 500 Index is a cap-weighted index of 500 stocks designed to measure performance of the broad domestic economy through changes in the aggregate market value of 500 stocks representing all major industries. The NASDAQ Composite Index measures all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. The market value, the last sale price multiplied by total shares outstanding, is calculated throughout the trading day and is related to the total value of the index. Herwire Financial and LPL Financial are not endorsed or affiliated with the U.S. Centers for Medicare and Medicaid Services or any government agency. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. Everybody, have a terrific weekend, and I'll see you next week.